Wayne Swan was recently named the world's greatest treasurer, and while we have no axe to grind with Wayne Swan, a more appropriate award may have been Treasurer of the world's best economy, at least in the developed world. 15 years ago, at the turn of the century, no one was particularly interested in Australia. All of the action was in new technology, and Australia was generally regarded as a land of sweeping deserts replete with mines surrounded by kangaroos and Sydney Harbour surrounded by big banks. It took nearly 10 years for mining to become interesting. Thanks to China, the demand for what we sell outstripped supply, and we enjoyed robust economic growth and governments awash with tax revenue. Our economic miracle has had little to do with governments or our regulators. They're okay, but they were also okay 15 years ago when no one gave a hoot about Australia. We really are the beneficiaries of dumb luck, and while it's regarded as bad karma to look a gift horse in the mouth, planning your entire financial future on dumb luck persisting would be making a gargantuan error of retrospection. In reality, there are headwinds aplenty for the Australian economy. Our terms of trade have fallen and could well deteriorate further. The last time this happened, a previous world's greatest treasurer famously mused about us becoming a banana republic. Because our currency is largely impacted by movements in commodity prices, the big mining companies will continue to get good income in Australian dollars if the value of the dollar falls. But most of our growth has come from a pipeline of development projects that's likely to dry up. We've had the famous two-speed economy, with our economic settings slowing non-mining industries to make room for development. Everything that has nothing to do with resources is largely on its knees as a result of our high currency and high interest rates. The Reserve Bank is now cutting interest rates and have acknowledged that we're past the peak of the resources boom that happened sooner and peaked lower than they'd expected. With an election this year, we have both potential governments trying to prove their economic credentials. They want to demonstrate they can return the budget to surplus, and this can only be done by raising taxes and/or by cutting spending. We have our own fiscal cliff in the making. And if that's not enough, there's the prospect of inflation when the currency falls and labour markets tighten due to the avalanche of retirements. Our Reserve Bank has form in heroically fighting inflation by increasing interest rates, and this would not be helpful if the economy is struggling. Meanwhile, across the Pacific there are signs of recovering. Housing starts were devastated by the financial crisis and now look set to rebound. Their lower currency has made their manufacturing industry more competitive, and their higher unemployment rate has kept wages down and enabled an escalation in productivity. They're unlocking a substantial natural gas resource, providing access to cheap energy. And by the end of 2014 they'll be out of Afghanistan, ending the longest war of their history. Finally, the presidential election is over. Obama won. The recent deal on the fiscal cliff saw the Republicans give in on tax increases for the wealthy, so there's a hint of a power shift. The potential for further political impasses is there, but hopefully we will see more sensible decision-making than we've seen over the past few years. So if we consider the full international economy, it's too early to call a recovery in Europe. We think they'll muddle through, and we'll have a better idea of how they're going about this time next year. In 5 years, the USA is likely to be humming, and the developing nations, mainly in Asia, never really slowed down. Meanwhile, in Australia, the two-speed economy is no more. We have a one-speed economy, and the speed is slow.